Believe the prior chapters all of you have gone through, understood the concepts well. Now we are moving towards understanding the theory base of accounting. A few principles we have understood, but here to make you understand what are the theory basis of accounting, I'll help you first to give you the premise of this particular chapter so that it becomes easier for you to understand the subsequent aspects which I'm going to talk about. So let me begin by giving you an example. Let's say there is a school, AB school, and there is a furniture shop. Now AB school being a non-profit organization. So the objective of running a school is not to earn profit. So that is the objective behind doing the activity or the school, running a school. So this is non-profit organization. All right. So the objective is not to earn profit. Whereas a furniture shop it runs business with an intention of earning profit. So the objective of a furniture shop is to earn profit. That's clear. Whatever it does, the businessman or the furniture on shop owner's objective is only to earn profit, nothing else. Now, with respect to maintenance of account by a school and by a furniture shop differs. Now AB school usually will have not there will not be sales as such, but there will be admission of student and the school will receive fees for admission. That is in a way a source of revenue for the school. So this is the source of revenue, which is fees or earning. But for furniture shop owner, the revenue source is by selling its furniture. Okay. Now the account maintenance will differ vis-a-vis a profit non-profit organization and a profit organization. Now, what kind of theory base is followed by a non-profit organization and a profit organization is the subject matter of study of this particular chapter. Now, let's understand a non-profit organization like school. So, what it does, there will be inflow of cash. Maximum nature of transaction is likely to be inflow of cash, and there will be outflow which may be limited to salary payout or maybe the rent if it is taken on rent, though usually it is not, or there may be staff salary. This may be teacher's salary, which is a major component of expenditure. So what it does, and it gets the fees or maybe some donation inflow of cash in the form of fees or in the form of donation to the school. So whatever inflow happens, that is utilized with an objective of running the school, meeting the day-to-day expenses. So running the school or meeting the school expenses, this is the objective. All right. And if something left over, that is used for development of a school. So this is what a school does. All right. Now, since it is a non-profit organization, their majority of the transactions are likely to be cash nature. Therefore, it maintains income and expenditure. All right. So all the inflow of fund will be written here and expenditures will be written, and finally whatever is the leftover, that is the if our expenditure is less than the inflow of cash, then there is an income or there is a deficit or surplus. So income is denoted as surplus or deficit. So this is by and large nature of accounting related working of a school. So it follows usually the method which is called cash method of or method of accounting. Whereas if we look at the business setup, what we will see, it has purchase of furniture for resale. It has sales to the individual buyer or maybe bulk buyer, whosoever it is. So there is purchase, there is sales, there is expenditure. There will be assets, rent. If there is an asset which is bought by the firm, then there is an asset. So there will be asset upon which depreciation will be charged, which is again a cost. So this profit organization maintains the accounting record not only with the basis of the cash. So it is not only the cash transaction that is happening. There may be some salary which is outstanding yet to be paid. Outstanding means yet to be paid. Income or revenue which is yet to be received. This may be the situation. So in this scenario, the business setup of furniture shop, their objective is to earn profit. So it maintains the account keeping in mind not only the cash transactions but even the outstanding which is not yet paid, or income for which the services have been given but money is not received, yet it is to be treated as income for the firm. So it works on accrual basis. Okay, accrual means either earned or received. If the service is provided or products are sold, it is to be considered as revenue. Whether cash is received or not is not material for deciding the profit or loss in case of a profit organization. Whereas this accrual basis, we have seen services provided, or there may be a situation that services received but payment is not made. Both the scenario, a profit making organization whose objective is to make profit
deciding the
will
profit or
treat
loss in
these
case of
two
a
on the
profit
basis of
organization.
accrual,
Whereas this accrual
irrespective of the
basis, we
fact
have seen
whether the
services provided,
corresponding cash
there may
is
be a
paid
situation
or
that
received. Whatever
services
be the
received but
situation, in
payment is
order to
not made. Both
calculate the
the
profit,
scenario,
it will
a
consider
profit making
all the
organization whose
expenses.
objective
There will
for
be revenue
deciding
in
the
terms of
profit or
sales,
loss
and
in
then there
case of
will
a
be
profit
corresponding
organization.
expenses which has
So
resulted
this is
into
that
sales. So
in
expenses will be
supporting
deducted
cash
from there,
may be a
less
situation that
expenses, and then there
receiving
is profit,
certification
which considers the
complex
broader
scenario
aspect
will
of
not be
business
considered
activity
making
in order to
organization.
calculate
There will
the
be
profit
revenue
in
in terms
case
of
of a
sales, and
profit
then there will be
organization. So I hope
corresponding
this is
expenses
understood
which
by
has
everyone.
resulted
A thin
into sales.
understanding or
Expenses which
little
are deducted
understanding
from
with
there.
respect to the
Expenses.
concept behind basis of accounting principle is to be understood here. So now let us go ahead and understand the next aspect, which we will touch by going through the write up on this particular chapter. Let's see. Now here, this is the name of the chapter. We have understood theory basis of accounting. What are the learning objectives while reading this particular chapter? What is that you are going to understand in this particular chapter? So there is a cash basis of accounting and there is accrual. Accrual means either services are provided or services are received, whether irrespective of the fact corresponding cash is received or not, it is to be treated in the books of account. That is accrual basis. Mercantile basis, wherein this is the same one and the same, which is actual happening is considered irrespective of the cash. Now let's see the difference between accrual basis of accounting and cash basis of accounting. What is the difference between accrual and cash basis of accounting? We will see this. A little more understanding on this will help you understand better. The cash basis of accounting, transactions that are recorded on cash being received or paid, whether services are given or not, or product is given or not, it is to be treated as whether cash is received or not is material, not the outstanding or pre-received or prepaid. These are not paid into consideration. All right, now what are the advantages? We have already seen in our example, furniture example. Advantages: it is simple because it does not pay into consideration the adjustments related to outstanding transactions. Then this approach is more objective as very few estimates and judgments are required. So there is no, in case of a profit organization, usually when there is sale happening, there are likelihood of bad debts, means debtors or people from whom money is to be received, certain percentage of them they do not happen to pay. So there is, it is an estimation which is made by the organization and it keeps a reserve that if supposingly there is a bad debt, then this reserve will be used in order to meet the expenses in terms of or losses in terms of bad debt. So that is why the judgment factor does not come into picture when it comes to cash basis of accounting, because that is not the jurisdiction of assessment of accountant when it comes to non-cash transaction. Now, suitable for the enterprises where more of transactions are on cash basis. In our example, school, we have seen only fees is either given in cash or check. So that is means there is major inflow of fund, or donations which are received also inflow of fund. So it is suitable for those set of organization, school, hospital, non-profit organizations, clubs, where the objective is not to earn profit. I hope these advantages are understood. Now let us understand there are corresponding disadvantages as well. So it does not give true or fair value, a fair view of profit or loss. That is because it does not take into consideration the accrual aspects or transactions in the business. It does not follow the matching principle. So matching principle, what is this is, in order to generate revenue, there has to be a corresponding cost or expenses. This is to be there. Unless we do the expenses, there cannot be generation of revenue. So as per matching principle, the revenue which is generated, the corresponding expenses are identified, and those expenses are deducted in order to get the profit. So this matching principle does not apply when it comes to cash basis of account. This does not differentiate between capital and revenue item. So supposingly, if a school buys, or let's say, smart boards for teaching students in the class, so the smart boards which are bought, which is an asset for the school, so this assets for the school, there will be an expenditure which is to be done. So this is a capital nature expenditure, not a revenue nature expenditure, but it treats this as an expenditure during the year incurred. It does not differentiate whether it is a capital nature expenditure or it is a revenue nature expenditure. Revenue nature expenditure means the benefit of that expenditure is going to be derived for more than one, for within the year. Revenue nature expenditure is the expenditure, the benefit of which the business gets within the financial year, which is max of 12 months. Whereas capital nature expenditures are such expenditure, the benefit of which the organization gets for a longer period of time. So, in case of a cash basis accounting system, it does not record or does not differentiate the difference between capital and revenue. Even if there is a capital nature expenditure that has happened during the year, it treats as an expenditure, and it does not pay attention to the benefits which it is going to get for a longer period of time. So it will consider that as an expense for that particular year itself, because cash is going out, so it is treated as an expenditure. So this concept does not apply when it comes to accrual, cash basis of entering the transaction. Now let's understand with an illustration. ABC firm had the following transaction, like, or let's say school. Total, there is no, just to understand, usually there is no sales as such, but total sales, let's say for understanding sake, it is 1 lakh rupees. Credit sale is 20,000. All right. Now expenses for the year is 25,000, and 10,000 still to be paid. So 10,000 which is still to be paid, it is not yet paid. So outstanding is not paid attention in case of a cash basis of maintaining accounts. Uh, Total expenses during the year is 25,000. So what is the cash expenditure? Out of 25,000, 10,000 is still to be paid. The total expenses is 25,000. So 25,000 minus 10,000. So cash expenditure is only 15,000. All right. So this is cash expense. So one thing we have understood, the expense. Now sales. Now this is the total sales, which includes cash plus credit. Now out of this 1 lakh, credit sales happen 20,000. So actual sales, how much? So total sales minus credit sales, so cash sales is equal to 80,000. So the profit or income of ABC firm will be this 80,000, which is the cash inflow by in terms of sales, minus the expenses, which is the cash expense of 15,000. So this is 65,000. This is to be treated as income. I hope you understood this, right? This is cash basis of maintaining account, books of account. Now there is accrual basis, the second one, which we discussed in our example. It was furniture shop. So let us understand on accrual basis. This is by mistake. So accrual basis of account. The transaction is recorded in the books of account when entered whether cash is received or paid or not. So this is whether even if cash is not paid, it is recorded in the books of account. Now it is based on concept of realization and expiration and follows two basic principles. So concept of realization and expiration. So the realization means the benefit is going to be realized for expenses that has been incurred. That is realization. And benefit which is going to be the benefit which has been received, it got expired. So follows two basic principles. What are they? Revenue recognition principle means for every revenue there is a corresponding cost or expense. So revenue, in order to generate revenue, there has been some cost incurred or expenses incurred. This is the revenue recognition principle. Matching principle, we have already discussed that it matches. So sales matches. In order to generate sales, maybe there has been staff salary or sales team salary or any related expenses in order to generate the sales. So expenses are matched with sales. All right. So this is revenue recognition principle and matching principle. These two basic principles we follow when it comes to accrual basis of accounting. I hope you have understood this. Now there are certain advantages. It is more scientific relatively. So more scientific. Why? Because it pays attention to the aspects which are considered to be expenses or revenue, irrespective of the fact that whether cash is paid or not. It shows complete picture or financial transaction and adjustments relating to a period. So there is a complete picture or financial transaction. Everything gets recorded in order to come to a conclusion of profit, or if there is any adjustment means outstanding, so this is to be treated in order to generate the profit. Now discloses correct profit or loss for a period as on particular day. Now so any particular day, if we want to know the profit or losses, we can very well assess through this method of accounting, because we know the expenses and what is the corresponding revenue. So we can, whether paid or not, immaterial, but we can treat it as profit or loss. This method has wider acceptability as it reflects true profit or losses. So we have understood, since it is better way of maintaining the books of account or records, therefore it is treated as, and since it generates a real profit, paying into attention the accrual concept, wherein revenue for the period and expenses for the period are assessed in order to find out the profit or loss. It provides true financial position as it considers adjustments of outstanding expenses, prepaid expenses, accrued income, income received. The financial position of an organization, which is let's say trading account, P&L account, balance sheet. Now in balance sheet, if particular asset or if there is a debtor from whom money is to be received, let's say 10,000 rupees, and there is a likelihood of bad debt, or there is a bad debt which is not going to be received, so there will 2000 rupees, so we will treat this asset as a debtor only 8000 rupees, because we are conservative that bad debt or a provision is to be made for a bad debt. That means we are conservative that this amount is not going to be received. Therefore, we have deducted the debtors, so that our and this bad debt amount is deducted from the profit, so that profit is not seen inflatedly, rather it gives us the correct figure, because there is a conservative principle of maintaining a books of account, wherein we always make provision for likelihood of losses. We never make any provision for likelihood of profit. If there is likelihood of profit, we do not put it into books of account. If there is likelihood of losses, we put up consider that as an expense by making a provision, so that if supposingly that losses or expenses happen situationally, then there is a reserve kept which can be used for meeting the bad debt, or provision for bad debt is there in order to meet the bad debt. So that is a very important thing to understand, which you will be subsequently studying, so that uh, we it provides true financial position, because lot many business related aspects are paid into consideration before deriving to a figure of profit or loss, or statement financial statement of a company. Now there are disadvantages, because it involves lot many aspects to be paid attention, so it is not simple as that of cash basis. This accounting process is too elaborative. So too elaborative means lot many accounts are required to be open. All the outstanding accounts are required to be open in order to show in the books of accounts. So it involves a lengthy process. That is why it is elaborative. A quick appraisal of profit cannot be done, because uh, profit or loss is not possible, as many adjustments are to be ascertained. But after having considered the adjustment, the profit that we get is going to be a real profit. Now let us understand the illustration. So we will see here ABC firm had the following transaction, which is total sales 1 lakh rupees. There is a credit sale of 20,000. So cash sales, total sale means cash sales are likely to be 80,000. All right. Credit sales are 20,000, cash sales are 80,000, total sales are 1 lakh. Now expenses for the year is 25,000. 10,000 still to be paid. So find out the income on accrual basis. So here, unlike the cash basis, we will take up cash as well as credit both. So total sales will be taken into consideration. So we will take 1 lakh, and there is an expenses. Though 10,000 is still to be paid, we will not pay attention to that. We will deduct this 25,000 rupees as an expense for the year. So 25,000 rupees deducted. I hope this is understood. The firm has total sales of 1 lakh, credit sales 20, not material, in order to assess the profit. 1 lakh is important, so we will take that. Neither cash sales nor credit sales are important to assess the profit. Now, expenses, whether paid or unpaid, is immaterial. But if expenses are incurred, it is to be deducted from the sales. So total sales, this is total sales, total expenses, we get income or profit, which is 75,000. I hope this is understood. This is accrual basis of account. Now there are certain differences, though by and large we have covered all the differences, but let's pay attention to this quickly. Difference between accrual basis and cash basis of accounting. One is nature of transaction. So here we have seen in cash basis, cash transactions are largely there, whereas the institutions or enterprises which maintains accrual basis, there will be cash and credit both transactions, and both are paid into consideration. There will be prepaid outstanding expenses accrued income, income received in advance. Such scenario is not there in cash basis, but it is there in accrual basis. Profit or loss. So here in this case, we get accurate profit in case of accrual basis. So right profit, and whereas in case of cash basis, there is income, but it is not a correct or complete income because that's the way it is recorded in case of a non profit organization. Now, technical knowledge. So, more of technical knowledge is required in case of accrual basis. So, accrual basis, it is more required, but cash basis relatively less. Legal position. So, accrual basis accounts which are audited, these have legal implications as well. So, this works on a cash basis uh, of accounting as per Indian Companies Act. Whatever the reports which are submitted by the auditor after having certified, it has legal acceptance. Acceptability, majorly, the acceptability of a accrual basis is more because important. It pays attention. It has reliability. Reliable is accurate, whereas cash basis is less reliable. We have seen usually profiting organizations are profit loss. Always either profit or profit, but if they have incurred losses situations as well, but they follow rules. Whereas in case of a non-profit organization, they follow. Okay, thank you all for listening to me. I expect those who are watching this to like, if you like, if it's dislike, make them you to expect to subscribe so that whatever new videos which I'm creating on the channel, share it your friends or neighbor so that the other students also get it. And very important, it's for me, what suggestions whatever relevant to make in the comment. I personally would go through and try to find out in the cordial as per the fact that I happen to also what so yeah, next class, we will please read that. So here, this particular chapter begins initial level of accounting comments, really understanding assets, liabilities, what are how the entry asset side of balance sheet entries are in the course of a particular transaction. How
और रेफरेंस मुझे पूरी बात बतानी पड़े